Good morning. It's Tuesday, December 16th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So yesterday I appeared on CNBC's Power Lunch to discuss the price action in silver, copper, and crude oil as we approach 2026. I make a strong case for silver reaching triple digits. If you're a subscriber to our channel, you can find the video in yesterday's upload. So my main point is that commodities are expected to play a vital role in investment portfolios into 2026, offering the potential for attractive returns. The outlook is really supported by supply-demand imbalances, heightened geopolitical risks, long-term trend changes such as the global energy transition, with gold continuing to serve as a valuable diversifier within client portfolios. Now, looking at the silver market, really its leadership in the metals here really reflects an industrial demand revolution here and cyclical momentum that is taking place. You look at the copper market inching a bit lower here as a risk-off mood and across different asset classes and markets here ahead of this U.S. jobs data could steer the debate here for the extent of future interest rate cuts, specifically this January interest rate cut. You do have gold easing after 5 straight days of gains, and gold's break above the recent 2-day chart high here. If you look at the chart pack, and I'll send this particular gold chart out, that it looks like it could make a move back up to that 44.30. It looks like any kind of dips here should be supported above the 41.90 level, and only a sustained breakout or break down below that 39.70 really jeopardizes the bullish trend at the moment. Structural support here with investor buying and also central bank buying should be able to support those lower levels in the gold market. Now, looking at the equity markets and kind of the broad picture amongst all the different commodities, there is a sea of red on the screen with most of the metals in the red here. Platinum, palladium, those are ones that are experiencing quite a bit of a surge here, pushing on up. Many of the clients working closely with me have recently put on platinum call spreads going from February all the way out to that April contract here, looking to lift some of those positions here and continue to hold some longer term positions as well. Now, looking at the broader picture on markets here, stock futures, they are lower here as traders await this delayed jobs data that will help inform the Fed as far as its next move. There's a huge range of estimates and no one really knows what to expect. I was listening to the details of it, in some of the different things were is that the household survey part of it, that's just completely missing because there was no one able to go out and conduct that data. As far as small businesses were concerned, what was the benefit of them even reporting the data? So it's missing a lot and has a lot of holes as far as what to expect here and what we're going to end up getting. So you look at the S&P 500 down about 0.2%, sitting at 68.68 on the March contract. If you're in December, be sure to look at March here going forward. With the NASDAQ here down about 0.3%, sitting at 25,267. The Russell showing just a little bit of weakness here, down about 1/4 basis point at 25.48. Then looking at the Dow Jones, down about 56 points, it's at 48,784. So you look at the consensus among the estimates coming out from economists here, and what they're looking at for November is about 51,000 jobs creating. But that setup really has been cautious going into the report. We've seen a rotation out of tech recently. We've seen some dollar weakness. We're seeing declines in the oil market and also copper. You have Bitcoin dropping below 86,000 for the first time in 2 weeks. One thing in the cryptocurrencies to note is that if you look at the Ethereum contract, that has shown a series of higher lows on the charts here and working its way back up into a trend reversal. You look at some equity insights. Well, the global events you should keep an eye on this week include interest rate decisions out of the ECB, the Bank of Japan, and also the Bank of England. Now, looking at our expectations here at that January 28th meeting, it's anchored at the same data here as far as yesterday, with a 26.6% likelihood that the Fed will reduce 25 basis points here, getting it down to a range of 3.25% to 3.5% at that January meeting. So we're going to have that non-farm payroll, the average hourly earnings, the unemployment rate for November. That's all due out at 7:30 a.m. Central Time. The reading on retail sales for October is also scheduled to be released. The December Purchasing Manager Index for manufacturing services and industries due out about an hour and 15 minutes later. You look at some of the FX, the risk rundown here. You go to the dollar index just slightly lower, 97.85. You get the euro currency at 118.09. Something to note, these are March currencies that we're looking at. You got 10-year yield still anchored here. Really tight range overnight and a tight range recently here. 4.22 on the upside being about resistance, and you get down to about 4.05%, that's going to be your major area of support. Can we get that dip below 4% in this dynamic with the yield curve steepening and with that short end really pinned? I'm not quite certain here. You look at the volatility index sitting at 1672, so not really throwing off any kind of warning signs whatsoever. Again, Bitcoin pushing back down here, and the S&P gamma exposure is really neutral gamma, implying that option positioning, it's really not heavily skewed in one direction or the other. The big note to take advantage of or take a look at is going to be on Friday, where you get $5.2 trillion of notional open interest linked to the SPY and SPX products that is set to expire and roll over into next year. So it's going to be the single largest notional expiration on record. You go over to Europe and Asia. Well, those European stocks, they were muted because they're waiting for the US payroll data. You get tech stocks in the energy sector that both underperformed. You got Asian equities, those fell here with the MSCI down about 1.6%. The Hang Seng down about 1.5%. Then you look at the ETF flows. Well, they were selling gold, and you can look at that gold chart here. You could see that it was starting to aim for that all-time high. So a little bit of a pullback here. They were buying silver, they were buying platinum, and also palladium. So they cut about 47,000 troy ounces of gold. The total gold held by ETFs is up about 18% year to date, sitting at 98.3 million ounces. Silver rose about 0.1%, sitting at 19%. So they added about 895,000 troy ounces of there. And then palladium up for 9 straight days. Take a look at that palladium chart, look at that platinum chart, and then finally the gold silver ratio sitting about 68 to 1. So we'll see what happens once this economic data comes out here. See if we get any kind of volatility. I really got to question this data though. It's quite suspect that it's even being released because it has so many particular holes and so much missing data into it. And we'll see what the reaction takes place following that report. So if you want to open up an account with us, shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.